So if you ask me today, what is the key reason for highly paid executives today to still procure life insurance policies? Simply put, it is liquidity. I've worked in the life insurance and the financial services business now for over 22 years. And in the course of my career, we've landed several clients who are basically C-suite executives in large Fortune 500 companies or blue chip firms. We've noticed a couple of things that are similar for each of these individuals. One of them being, of course, that they are very handsomely paid. The remuneration is top tier remuneration. Needless to say, these are executives like CEOs, CFOs, COOs, or even director of sales. The other thing that we've noticed is really common for them is they all have a shortage of time. In many cases, these individuals are either traveling to numerous locations, are on several hundred flights a year, or in today's day and age, are on constant Teams or Zoom or Skype calls. Case in point is an individual who is a client of ours for the last 8 years now, has been on an average of 300 flights a year. He comes back into Dubai for the weekend to spend time with his wife and his kids, and then he gets on a flight again either on Sunday night or on Monday morning, and he's off traveling the world again. And because he's on so many different time zones, he's constantly working. A couple of things have happened along the way. One is that his health has taken a beating. Second is that his relationship with his family is more estranged. And the third thing we've noticed is while his wealth is accumulating in his bank account, it's not been managed appropriately. The assets that have been procured over the years are scattered and haphazardly managed, which means in his situation, if something goes wrong tomorrow, the probability that his family will be able to inherit all his assets in the right manner may be difficult. Finding the right amount of time to even set a decent will in place or even list out all the assets seems to be a challenge for him, as mentally and physically he's completely drained. One of the processes we went through with him was to help him list out all his assets, as this was a prerequisite for purchasing a life insurance policy. Most of the companies that hire these individuals to perform these high-pressure tasks expect the world of them. They're expected to deliver regardless of time zone, regardless of the hours of the day, or whether it's the weekend in your jurisdiction or not. As a result, most of their time is consumed by work. On average, these individuals may work 12 to 14-hour workdays, while their subordinates working under them probably stick to a strict 8 to 5 routine. The reality is that they're getting paid those mega bucks to perform a task which has no boundaries as far as time, personal commitments, health and lifestyle, or any other personal issues are concerned. Another one of the benefits of being a C-suite executive in a large Fortune 500 or a blue chip company is part of the HR policies for these companies and their employees is large valued group life insurance policies that are put in place to ensure that if the individual passes away while he is working with the organization, then his family gets a huge settlement in terms of a payout to compensate for any potential loss of income that could result as him not being there. Don't get me wrong, most of the time these HR initiatives come from a great place, but it's actually intended to ensure that the employee doesn't leave the organization for want of better benefits. In addition to these group life insurance policies, which are purchased by the company or their employee, the other thing that is known to happen commonly is retirement plans or pension plans and stock options are also provided to these employees to ensure that their loyalty to the company is retained or maintained for a longer than average period of time. The catch in these kind of contracts and the catch in these kind of life insurance policies especially is that these policies are owned by the company or the organization, with the life assured being the individual who is covered, and the beneficiary, while normally would be the spouse and the children. As these policies are owned by the company itself, the payouts are usually made to the company that then disperses this money into a payroll account of the employee on the event of death. In most cases, these life insurance policies, which are group insurance plans, are non-transferable, which means they will be enforced as long as the employee is an employee with that organization. The moment he or she leaves the organization, that policy now becomes null and void. In most cases, what we've seen is these individuals have amassed and created tremendous amounts of wealth. However, they haven't been able to put together a strategy to be able to transfer that wealth down to the next of kin. The reason then for purchasing a large value life insurance policy is while the rest of the estate may be illiquid or unable to be transferred down to the next of kin immediately, the family would suffer from an illiquid situation. Having a life insurance policy that pays out immediately to named beneficiaries only in a manner which is incontestable by any third party whatsoever, even creditors for that matter, now allows that family to continue living their life as normal while the rest of the estate gets settled. Regardless of the life cycle of the individual, life insurance would be a great add to your portfolio. It would not be something that would take away from everything else you've created, but just would help substitute for some of the shortcomings in your planning. It could be something as complex as estate taxes planning, or something as simple as providing a stopgap for liquid reserves.